Good morning, everyone, and welcome to TBR's Vendor LTE Market Share 2012 Review and 2013 Forecast. My name is Allison Crawford, and I will be your host for today's session. The Networking and Mobility team has been researching the performance of the telecom market for years, focusing on business metrics such as revenues and operating expenses, and leveraging proprietary TBR models to create strategic business insight unavailable elsewhere in the market. The data we'll present today is a custom view of the LTE market derived from this ongoing research and available to clients of the NMP practice. Before I hand this over to Chris, there are a few action items I'd like to cover with you. First, we'll record today's session and post it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others that we posted. Second, we'd like to hear your thoughts and opinions on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Chris will address them at the end of the presentation. Or, if you'd like to set up a client inquiry for more detailed discussion, please reach out to Chris directly at the end of the webinar to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides, as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And I will share all these social media links with you again at the end of the presentation. Now let me introduce Chris Antlitz, analyst on the Networking Mobility team here at TBR. Chris has been covering the telecom infrastructure services market for the past 5 years and guides our research on the TIS benchmark. His insight into operators and their competitive strategies have helped our clients improve their strategic go-to-market plans and improve performance. And with that, let me hand this over to Chris.
Thanks, Allison, and welcome everyone. By the end of this presentation, we'll all have a better understanding of which vendors led the LTE market in 2012 and what drove their success, what the LTE market share picture will look like in 2013 once more operators start deploying these networks in other regions, and third, what the LTE market opportunity is going to be beyond 2013. We're going to talk about all three of those areas. Before we jump into the content, though, I just want to highlight where TBR looks at this market and where we're getting this information from. So this is a map of what my group here at TBR does, the Networking and Mobility practice. We do extensive operator research and we do vendor research. And you can see all the bubbles below those two main research areas, what areas we're looking at. So areas of services, equipment, software on the vendor side, and then we're doing deep dives into the telecom operators, what their CapEx spend, OpEx spend looks like, strategic things, roadmaps, those types of things. So we're using both of those ends of our research to get this level of detail in this webinar. And then a little bit more on the vendors, because that's what we're going to be looking at today, is what the vendor market shares are. So that our vendor research is driven by our syndicated reports and our custom projects. These are the areas that we do that research in. So we do benchmarks, addressable market forecasts, and we do syndicated reports on the vendors on the bottom right-hand side of your screen. We do quarterly reports on all of those companies, where we delve into things like, well, what contracts are they getting in LTE? What does that revenue picture look like? And then at the end, when we do these reviews, like this LTE review, we aggregate up, we roll up all those numbers, and then we get our total market assessment. So next slide, please. Okay, so jumping right into the content. Vendors most exposed to the Tier 1 operators in North America, Japan, and South Korea took the commanding lead in LTE in 2012. And as you can see in this market share distribution, Ericsson, Nokia, Siemens were the biggest beneficiaries of the contracts, particularly in Japan and South Korea. The sheer revenue coming in from those contracts among the 6 Tier 1 operators in both of those countries was enough to put them over 20%, each of those two vendors. Now, let me just back up for a second. We are calculating market share based on LTE, RAN, and EPC revenue. Okay, we're stripping out services, so product attached services are stripped out. We're just looking at the equipment that's being sold here. So Huawei came in third place. You know, Huawei's got a lot of contracts. They are neck and neck with Ericsson. I think currently they have over 130 commercial contracts worldwide. The thing is that most of those contracts are very small in scale. They don't, you know, they're not like these massive contracts that Verizon, AT&T are putting out. Sprint, some of these other operators. Huawei has a lot of tier 2s, some tier 3 contracts, and some of the lower end markets like Africa and Middle East. So it doesn't equate to as much revenue as some of these higher volume contracts that Ericsson and Nokia Siemens are getting. Alcatel-Lucent, they're really dependent on 3 operators, and that's Verizon, AT&T, and Sprint for the bulk of their LTE revenue. Now, those are big contracts, but their market shares it's mostly those contracts. Then they have a few contracts with some smaller operators in other countries. We also have Samsung, who has been a disruptor in this market. Samsung has really traditionally been a U.S. and South Korea-based vendor for their wireless infrastructure, but they've really been branching out. They have more than 10 contracts now for LTE worldwide. They've gotten into India. They're in Europe now. They've got a contract in Chile, in Latin America. So they're really branching out, and they are gaining momentum in LTE. And we see that their market share is going to be going up in next year, we're forecasting. Fujitsu, NEC, they're really dependent on the Japanese market for the bulk of their RAN revenue. Both of those firms, they only have contracts with Japanese vendors, Japanese operators right now. So Fujitsu's dependent on Docomo for the vast majority of their LTE RAN sales and core, and then NEC gets some revenue from KDDI and NTT. ZTE's been the laggard. It's quite interesting because they are pretty big in other areas like CDMA, HSPA. They have been, their customer profile, they have a pretty large amount of contracts, but the actual revenue coming in from those contracts is not, it's not to the same scale that some of these other ones are. ZTE, most of ZTE's customers are based in emerging markets. They've had it's been very slow going in the developed markets where the real dollar volume is generated. So they've been a laggard there, particularly in 2012. Now, if we look at 2013 and what the picture is going to look like, and we're going to break this down further in the coming slides, but essentially, China Mobile is the big wild card here, and it's really going to stir up the shares for the vendors like ZTE and Huawei particularly. So with that, let's go to the next slide and we'll talk a little bit more about China Mobile. So China Mobile is going to be spending $6.7 billion this year. At least that's how much they've earmarked. The operator has had some delays in their tender offering. They've put a tender out in May, I believe, for 207,000 LTE base stations. It's the biggest LTE, it's the biggest RAN tender, I think, ever by sheer number of units. And that, just the sheer size and scope of that contract has big implications for LTE market shares. The tender should finish, we should actually start seeing base stations deployed as part of that tender later this year. The real revenue move is going to be in 2014 when they're really going to get all those base stations out. Because of the delay, I don't think they're going to be able to get all 200,000 out this year. So there'll be a little bit of a lag there. But even so, if you look at the 2012 pie chart to the 2013 pie chart, you'll notice that certain vendors are going to be going up in shares, particularly the China-based vendors, so Huawei and ZTE. Both of those companies are going to be getting a very large portion of that tender, upwards of 20% for each vendor. And that has huge, it's going to be huge boost to their LTE market share. The real boost is going to come in 2014, though. 2013 is really just going to be a step-up year for them. and then you're really going to see the shares mix up in 14. Alternatively, some of the Western vendors will get a portion of the tender, but they will get a lower share than ZTE and Huawei will. Alcatel-Lucent is very well positioned to obtain the largest share of the Western vendors of the China Mobile contract, and then Ericsson and Nokia Siemens will get a smaller portion. So that's how that's going to shake out. Just the reason that we're focusing on China Mobile is because of the sheer dollar volume of that contract coming to market. It's really going to have implications. Then you have a bunch of other countries operators are going to be ramping up. In India, there's Latin America. There has been some delays in those countries. So really the big moves in the market shares are really going to take place in 2014 when all those contracts start ramping up. So breaking it down by vendor, and we'll talk about the drivers for each one. So Ericsson is going to remain the LTE market share leader by a wide margin. But with the China Mobile deal coming on, the other two Chinese operators are going to start coming out with LTE as well. It's going to shift, it's going to reweight the shares quite a bit. And Ericsson's 3-year market share trend is down because of that, because ZTE, Huawei, and Alcatel-Lucent will get a disproportionate share of those contracts. So why is Ericsson leading? Well, they have contracts with 5 of the 7 Tier 1 operators in North America. The only ones that they don't is with BCE and TELUS. They also have LTE contracts with all 3 Japanese and all 3 South Korean operators. Those contracts, because of the profile of those customers and the amount of money that they were spending on LTE, they gave Ericsson a huge head start over the competition. So Ericsson's always had this early lead. Their market share trend is going to be trending down as the other vendors start catching up, but they're still going to be the leader. Second, we go to Nokia Siemens. Nokia Siemens, they really were able to pull ahead from their acquisition of Motorola Networks. Motorola had long-standing relationships with operators in Japan and South Korea, and by breaking into that, Nokia Siemens was able to leverage that legacy customer base and upgrade them into the LTE contracts. Nokia Siemens has also won a large portion of the T-Mobile USA, BCE, and TELUS contracts in North America. Those taken together help them come in second place. There is going to be some market share erosion within Nokia Siemens, but not as substantial as for Ericsson. Third, we come down to Huawei. They've been prevented from selling to Tier 1 operators in the United States. That has prevented them from placing in the top 2. And it is going to remain a hindrance to them going forward, just because the contracts in the U.S. I mean, you have Verizon, AT&T alone spending more than $4 billion to deploy LTE. I mean, that's a sizable amount of RAN and core that's being deployed. Their smaller contracts elsewhere in the world is not enough to really make up for that. So it's really, for Huawei, it's really going to be about winning big in China and then winning a large volume of contracts in the other emerging markets. And that's how they're going to grow their market share over the next 3 years. Fourth, we go to Alcatel-Lucent. We've already established that they depend on AT&T, Verizon, and Sprint for the vast majority of their LTE revenue. Alcatel-Lucent is struggling to get traction outside of their core customer base. Their core customer base is really in the U.S., in China, and in France. Outside of those countries, the company's had struggle competing against Huawei ZTE at the lower cost, the 2 lower cost vendors. They've also had some struggles against Ericsson, who's more of an end-to-end provider and has been able to take a little bit of market share from them in certain accounts. Then we come down to Samsung, slowly gaining momentum, especially with Tier 1 accounts outside of their core U.S. and South Korean markets. We are expecting them to outperform in Europe, and they will be supplanting incumbent vendors. So, you know, if someone like an Ericsson or an Alcatel-Lucent was supplying a particular operator with, say, GSM or WCDMA, you know, in those types of instances, you know, Samsung might be able to displace one of those vendors and be a new vendor performing either LTE overlay or modernization around single RAN. They have both of those solutions. Fujitsu and NEC, we'll take them together. Really, they are very dependent on Japan, and they're a one-trick pony. They have not had traction outside of Japan. We don't expect them to get much traction outside of Japan. That might change if they start to partner with other vendors. But, you know, their revenue, at least for the next, you know, for our view, at least through this year and into 2014, their market shares will be declining as Docomo and KDDI start to trail off their LTE spend. Now, in Japan, most of the LTE build-out, the coverage build-out has been completed. So now the focus is shifting to densification, and that's including, you know, adding more base stations to existing sites or supplementing macro with small cells. And then last but not least, we have ZTE, who will be gaining market share. They're going to get a big bump in 2014 from China Mobile. So slow to build momentum, but they will be gaining substantial share in the next 3 years. So the key takeaways. So basically what's happening is the non-Japanese-based APAC vendors, so Samsung, Huawei, and ZTE, are all going to be gaining share, especially once the emerging markets and European operators start ramping up LTE investment. So Japan and South Korea, those two countries are post-peak now that LTE has been deployed across most of the countries. And the focus is shifting to densification, which is lower dollar volume, and it's going to be, there's going to be less spend intensity by those operators in those countries. And that's going to impact the Japanese vendors the most. So Fujitsu and NEC, their shares are going to be steadily declining. Competition and mergers and acquisitions in North America will spur additional spend on LTE. So we've all seen the news headlines. You know, we've got Sprint buying Clearwire and getting a capital infusion from SoftBank. We've also got AT&T buying Leap. And we have T-Mobile buying Metro PCS. We also have Verizon possibly buying a smaller Tier 2 operator in Canada. So the M&A is going to continue. There's basically a scramble to get spectrum because the new stuff coming to auction is not going to be enough for operators' needs. So let's take the case of AT&T and Leap. A third of the spectrum holdings that Leap has are not being used right now. And they're in the PCS and AWS bands. So AT&T, by buying them, they're going to immediately start utilizing that spectrum if that buyout is consummated by the regulators. So that's a net positive for the LTE market, and that will, so the incumbent suppliers to AT&T in this instance, we are expecting them to get another bump in revenue as the spectrum that has been underutilized or unused completely starts to be put to use. You know, that's going to require new cell sites to be deployed. It might require some densification, some small cells. So it's a net positive for sales of LTE RAN and EPC. Ericsson's going to maintain its commanding lead, but their share will start going down. Their involvement in network modernizations in Europe is critical to their success. So over the last 2 years, Ericsson has been taking a loss on some contracts across Europe as operators in the region modernize their RAN. So basically what's going on is there's a lot of legacy RAN in Europe. I think Ericsson's publicly stated there's like 1.5 million base stations legacy across Europe. And they've been an active participant in ripping out the old RAN and putting in more efficient single RAN that is LTE enabled. And it will enable the European operators to turn on commercial LTE service much faster. So Ericsson's been taking a loss on some of those contracts, or a lower margin, with the expectation that once those modernizations are complete, they will be called upon to assist those operators with the turning it on to LTE commercial service, and also helping in the densification, which is much high margin business, and also deploying small cells. So that could be a wild card, but it really depends on when the European operators are going to start ramping up LTE spend. The economic situation has not gotten better, and operators in the operators in the region are dealing with continued pressure on ARPUs and regulatory extra tariffs and regulations that are preventing them from spending as much on the CapEx as they would like to. But once those issues come to rest, I think that Ericsson, that will help them stem the decline in their market share for LTE. Last but not least, for the key takeaways, we've got China Mobile, 6.7 billion plus in LTE investment, really going to push Huawei ZTE, and to a lesser extent Alcatel-Lucent. It's really going to boost those shares. That's really going to be a 2014 story due to the delays that they've been having. So before we open it up for Q&A, just want to highlight how this information, because we do webinars like this pretty frequently on key topics. So every quarter, the networking and mobility practice at TBR gets together, and we identify the key topics taking place in the industry, basically the buzzwords, and then we make sure that those topics are integrated in the syndicated reports, as well as our benchmarks, and we also use those topics for webinars. So this is our 2Q12 key topics. So we've got the big four, NFVs, SDN, SON, and cloud, LTE, which we've just done our review, enterprise solutions, and then consolidation. And these are just four areas that we're looking at very closely and that we will be writing extensively about in our next series of reports. And expect to see more webinars on these types of subjects in the coming months. So with that, I think we'll open it up for Q&A.
Great. So we encourage anyone who has any questions of the materials that Chris just presented to send them through now. We do realize that this is unique information that you're probably not seeing elsewhere. So if there are questions around how we did this, we actually got one question on the methodology. I think we'll probably start with that. So the question, Chris, that came through is, in the intro you mentioned that you use your own models to get this information. What was the methodology used to obtain this data?
Yeah, so we use a variety of methods to get this information. So the first thing that we do is we look at actual contracts announced to date, and we track, which vendors are winning contracts where. We will look at the dollar volume that's going to be spent on that contract, the roadmap, how many years it's going to take to deploy that infrastructure, what portion of it's really going to be for LTE RAN and EPC. And we do that for each of the vendors, and we have extensive models that take, especially for the bigger contracts, that take how much the sheer spend is going to be and where that money is going to be flowing into and when. The other driver that we look at is vendor modeling. So we take company-reported information on each vendor, and we model out where their revenue is coming from. So, for instance, a company like Ericsson, they report networks revenue. So we will take networks revenue for the full year, and then we will triangulate that data point, that baseline, with commentary that they've provided publicly. We also do primary research to get to validate some of our figures and fine-tune our figures and kind of get a sense of, are we in the ballpark, and just getting a higher accuracy. And we do that for each vendor. So basically, we use a mix of primary research, which includes company-reported information as well as interviews that we conduct separately. We also attend trade shows to get information from those, and then we are leveraging secondary information, which is basically reported contracts and then collecting information that way and synthesizing that. By triangulating all of those points together, we're able to get these models for LTE specifically.
Okay. The next question that came through, Chris, how much of an impact will small cells have on LTE market share, and what vendors do you think are best positioned to capture that share?
Yeah, so by the way, we are including small cells in these market share figures. There hasn't really been LTE small cells commercially available until this year. So 2012, there's really no small cells in there for LTE purposes. Really, next year, we're going to start seeing a ramp-up of multi-mode small cells being deployed. So they're going to have 3G, LTE, and Wi-Fi capability. So which vendors do we see best positioned? Well, nearly all of the vendors that we are looking at that do the macro also are doing small cells. It really depends on who has the customer relationships already, where they can leverage existing LTE contracts they have and pull through some small cells. It's going to be much more difficult for vendors like NEC and Fujitsu, who have small cells, to really get those into markets outside of their core customer base. So with that said, it's really going to be about the companies that have the broad exposure to international markets, who already have sizable LTE contracts with a variety of operators.
Okay. We had another question come through. What's your assessment of LTE deployment in Latin America, and what impact will that have on vendor shares?
Yeah, so Latin America. So a lot of the tenders have been issued and already bid on. So basically, the vendor selection process is largely complete across most of Latin America. Ericsson's secured, I think, half of the market share in Latin America for LTE. And then Nokia, Siemens, and Huawei got the second and third positions. There's been delays there also. I think there's been some stipulations around spectrum bands, which ones are going to be used. There's also been some regulatory hurdles that operators have had to jump through just to get ready to actually start putting this stuff in the field. And those things are taking a little longer than anticipated. Latin American operators were supposed to ramp up investment now, and it looks like they're about 6 months behind schedule in aggregate. So we're expecting now that that's really going to start contributing in 2014 to LTE revenues. Okay.
It doesn't look like we had any additional questions come through. So if anyone out there does have a question, please send it through at this time. So with that, I'll give you guys back some time out of your day. It was short and sweet, so thank you, Chris. As I mentioned, you can follow Chris as well as TBR at the Twitter handles listed here. These are all the other social media links for SlideShare and YouTube, where we are posting both the deck as well as the presentation. And we will be sending out the link again as well as the deck to you directly within 24 hours when we sign off. Before you actually log out of the webinar, I'd like to ask you to take a brief survey about today's presentation. We're researching the technology market. We're also trying to get feedback back from you guys about how we're doing, how the presenters are doing, what information that you'd like to see more detail on. So any feedback you give us will be taken very seriously. I'm going to leave the chat function open for a couple of minutes in case anybody has any last-minute questions or would like to follow up with Chris to set up a conversation around the LTE market share information we just sent. And if we don't hear from you today, we will look for you on future webinars. As Chris mentioned, we are doing several over the course of this quarter as well as next quarter. So thanks again for your time, and we will talk with you all soon.